Hello, Panhandle folks. And as I mentioned, I am so super excited for the loan officers that are coming on board to share their products, to share their experience. These few loan officers that I actually chose are just unique, and I just want them to share what they actually are doing and just out of the box type of products that I believe that a lot of the buyers or even some of the sellers that know buyers would need. And so we have here Ed Brown, and he's got a lot of years of experience. And Ed, I'm just gonna ask if you would just introduce yourself. And Ed's with AnnieMac Mortgage, and so you could share a little bit about your history, and of course go into the product that you want to share with the world. So,
With the world.
yes.
There you go. Sure. Well, thank you for having me on your podcast, Karen, and I appreciate it. And yes, I do work for AnnieMac, which is an acronym, for American Neighborhood Mortgage Acceptance Corporation. We're a multi-billion-dollar lender, headquartered in New Jersey, and I have a branch here in Pensacola. I was originally born and raised in Pensacola, and have been in the mortgage industry, or I should say the real estate banking industry, for over 20 years. And my main center of focus has always been around residential real estate lending, residential real estate construction, VA mortgages, first time home buyer programs, and so forth. So I've been doing it a little while, and I mainly focus on purchase business. So about 90% of my business is purchases. And the goal there is to educate the customer, find the right program for them, and ultimately, just like your goal is as a realtor, is to help them get the home of their dreams and something they'll be happy with, be able to afford, and be able to live in and enjoy.
Yes, right. And thank you for that. I do want to ask because some of my clients that actually call in, they don't know what a loan officer or licensed mortgage broker is. And so I kind of want to, if since you're my first loan officer guest, do you mind sharing the difference between just a regular, should say the regular loan officer, if you could just share the difference of a loan officer and a mortgage broker, licensed mortgage loan officer, just kind of explain that
Right.
if you would, because those are the basic, I believe that I believe that buyers need to know that.
Right. Well, all of us are licensed by the National Mortgage Registration System, NMLS, or licensing system, excuse me. So we're all basically have the same mortgage training per se. But generally bank employees that work for banks or credit unions, they're regulated by the FDIC or whatever, the OCC for some of them. And there's a lot of acronyms for the different federal agencies that regulate the lending industry, whereas they have maybe a quarter or part of their overall business model is mortgage lending or residential mortgage lending. They may have a commercial division at a banker or a consumer loans at credit unions where they do cars and personal loans and stuff like that, or credit cards. I work for what they call a mortgage lender. And the main difference between the two is we just do mortgages. Our whole model is based on that. Our whole budgets are allocated towards developing, improving, and making the mortgage process 100% focused on the customer or the borrower to make sure that they get the best service level they can, and 100% of our resources go towards that. So we all kind of do the same thing to a certain extent. The banking is a little bit different because they do have the banking component. So you make your deposits, or you can open a checking account or savings account and use their other services if you need those. Whereas with a mortgage lender, you wouldn't open a checking account with us or a savings account. I wouldn't be soliciting you or offering you a credit card or something like that. It'd strictly be we're 100% focused on the mortgage side of the lending model. So that's really the main difference. And a mortgage broker, that's a terminology used a little bit different there. Mortgage brokers, the main difference with them, they're licensed just like we are through NMLS, but they don't have the ability to fund their own loans. So they're basically brokering a loan with a secondary investor who's ultimately the one purchasing it. So those the mortgage brokers are out there. They do a great job. They serve a need in the community. It's another avenue to get a mortgage. And that's just the difference is we as a mortgage lender, we service about 40% of our loans we do, but a mortgage broker, they generally don't service any of their loans. They're selling it at the time of closing because they don't have that servicing side of the mortgage process.
Yeah, that's great information. That explains your position as a mortgage broker in a brokerage firm, which is a lender. That's what AnnieMac
Right. Well,
is.
the proper, yeah, I'm considered a mortgage lender because we're kind of the step between a bank and a mortgage broker because we do fund some of our loans and we service about 40% of our loans. Common term, you know, people say, you know, when they close their loan, well, they sold my loan to XYZ Bank. You know, I will tell you 100% of the time in a mortgage broker transaction, your loan's going to be sold
Yeah.
because they don't have a servicing division. Whereas as a mortgage lender, we actually loan money and we service some of our loans. Now, we do still sell some of them, and that's kind of the advantage to selling them is we go out there and shop the rates. So if another bank that or another lender or servicer that services loans has a better rate and we have a relationship with them, then we'll turn around and we'll sell that loan too to give you the best rate. But if it ends up ours is the best rate or ours is the best program for you, based upon the type of product you need, then we can also put it on our books and you make your payments to us for the life of the loan.
Yes, right. Okay, great. That's great information. So, Ed, let's go into your niche product. I was so intrigued about it and haven't heard it at all before. So, yeah, it's the cash for keys, buy now, sell later, and then one more other product that I forgot. I didn't make a note of that. So, yes,
That's okay.
have at
Well,
it.
yeah.
Yes.
Okay. It mainly, the original product was called our Platinum Approval. And our Platinum Approval was very successful because a little bit different than some lenders is we actually are able to send our borrowers to our underwriter and have an underwriting approval on the borrower before they go out and shop for a home. A little bit more process in the beginning. You know, a lot of times now people can go online. They basically they put in the information, it pulls their credit automatically, and they get an instant pre-approval. Well, the pre-approval's great, and it works in a lot of cases. But as the market has gotten more competitive, and there's multiple offers on property, it's more and more sellers. I mean, their goal is to sell their home. You know, they're wanting to sell their home for the price they want to sell it, and they're wanting to close as quick as possible. The challenge that comes in with just a pre-approval a lot of times is simply that they haven't looked at the income. You know, a real person, I should say, hasn't looked at the income, or they haven't evaluated if they're, you know, if they work off of tips or they have commission, they're 100% commission driven. You know, a lot of the questions that dealing with the underwriting part of it on the front end takes care of weren't asked. So it becomes a frustrating experience sometimes for the buyer, seller, and the realtors, and quite honestly, the loan officer, because an offer's made, you got 30 days to close. You know, then you start gathering the information from the borrower, and 10 days into it, you realize, well, wait a minute, we have a problem here. You know, their commission income, yes, they make, you know, X number of dollars a month now, but last year they weren't making commission. And the rules say you got to have 2 years worth of commission, and you take the average of the 2 years. So the Platinum Approval takes care of a lot of that because the due diligence of the borrower is done before the approval's given. So you as a borrower or you as a realtor or you as a seller know, hey, this person's approved. They're conditionally approved, and all we're waiting on is what we call the third-party items, which you don't know till you go under contract, and that'd be the appraisal, the how much is the homeowner's insurance going to cost, does, you know, termite inspection, you know, title work, survey. So it really kind of dialed it in for us and was very successful because we had the borrowers approved and we could close loans in 20 days or less. Well,
amazing.
then with the way kind of the post-COVID or COVID or post-COVID, what we ended up encountering is we're doing this process. We're getting all this work done for our borrowers. They're 100% on board. We've got great realtors. And, I keep getting the realtors calling me or the borrower calling me saying, man, we lost this deal to cash. We can't get a deal. They're not taking financing contingencies. And that we really like that house. And just people getting frustrated. So that's where we're like, AnnieMac, our principals at AnnieMac, our CEO and senior leadership team said, you know what? We know these borrowers are approved. We know they can buy the house. So what our principals did, they formed AnnieMac Equity, private equity. And basically what it is when we have that platinum approval, we have what we call our cash to keys offer. And what it basically is we're removing the financing contingency. We're putting our money where our mouth is. We're saying, hey, we've approved this borrower. They're credit worthy. They deserve to have this house, and we know we can close. And if we don't close it, we'll buy it. And then we'll sell it to the borrower.
Mm-hmm.
And our goal is not to make money off this product, but what it is designed to do is help our borrowers that we've got pre-qualified have a better chance of winning the deal. The market's slowed down a little bit, but I'll tell you, and this market and probably the sweet spot I'd say is between the $300,000 and $400,000 range. There's still multiple offers.
Mm-hmm.
Now there's not 10 of them. There's not offers over asking, but there's still multiple offers.
There is. That's right.
And when you as a realtor present that contract to your counterpart, the listing agent, and say, hey, look, I've got a cash offer. We're going to close in 30 days. We just got to do our due diligence on the property. You're probably going to get that offer over somebody who's just got hopefully get that offer somebody who has a financing contingency on there. So it just levels the playing field. And the beautiful thing about the Cash to Keys program is we do our job right on the front. All we're waiting on is the appraisal if one is needed, or to make sure it passes the home inspection so they can get insurance or clear title. Once we get those items in, we're ready to close.
Wow.
So
it's
I've closed,
really like a cash deal.
It was 100%. It's a cash offer.
Mm-hmm. Wow, you should have had that product a year ago.
Well, and that's it. Yeah, that's when we first rolled it. Yeah, that's why we came up with it, because we do a wonderful job of pre-qualifying people. We do our due diligence in the front. I would say of people that we pre-qualify, 96% of them go to closing.
That's awesome.
Because we do the due diligence on the front end before they ever make the offer.
So that's one of the products.
That's one of them.
Yeah,
and
for the sake of time, in a nutshell, the other two, because I am going to post your information, and even with realtors out there, I know you have a realtor webinar that we can all be trained under to get certified to learn this product, which I'm going to actually register and take myself. But can you just share, a little bit about the other two?
Well, the first one was the platinum. That was the original. Okay, that was before the cash to keys offer. So the final one is called the buy now, sell later. And what it does is the other problem that we encountered, and it's always frustrating. I'd say maybe 20% of the time everything goes smooth and everything works out right. But a lot of times offers were being made with contingencies on selling their current home.
Yes.
And that's always a challenge for somebody, because you got to coordinate moving. You got this person's trying to get their financing to buy your house, and you need that money to buy your house. So what we ended up doing with the buy now, sell later is say, you know what? Not only will we remove the financing contingency, but we're going to do an evaluation of the home you're selling. We're going to get we have different models, they call them AVM, appraisal valuation management, buyer's price. We have different ways of evaluating the home. And we say, you know what, we're going to go ahead and underwrite this loan as if you're selling your home goes through.
Wow.
And then we're going to package that with your purchase offer, and we're going to back it with the cash to keys. So once again, now you're not having a contingency for financing. And you're not having a contingency that you have to sell your home before you can buy the new home. And then we're going to go right through that transaction. And if your home doesn't sell before then we're going to use the cash to keys portion of it. we're going to make sure you close on time. And at that point, you can move in that house and you'll pay, whether it's daily, weekly, monthly, whatever, however long it takes. You'll just pay rent, basically a rent. And once your home sells, then we go through with the purchase of the new home. And at that point, you own your home and you're on your way.
Wow. Yeah, that's definitely out of the box. Very different. I know a lot of the sellers might be nervous. I don't know. I know that you had said there's a few realtors that have testimonies of this product. So again, we are going to learn this. I think there's 3,000 realtors here in Pensacola. So I'm really
Yeah.
excited because I know this is just the beginning of you introducing it. And then, of course, when the word gets out, we all probably are going to be using those two products.
Yeah, and we have a proven track record.
That's
We've been
awesome.
doing it in our other markets, and I've done a lot of pre-approvals for the Cash to Keys program. But the ones that I had, fortunately, a lot of them were people that had already sold their home, and they were getting beat out by cash offers, and they were living with friends or whatever. And you know what? On the ones that I have done, we've never had to use the Cash to Keys side of it, and most of them are closed in 15 days or less because, once again, the borrower's already approved. So if we need an appraisal or, we just need to do the due diligence on the property once they get the property.
Wow.
And, if we get appraisals back quick or we get, the insurance and everything in place, we zip right through it. We want to close as fast as we can.
Sounds great. We all want to close it, and that's the goal.
Exactly. That's it.
Ed, before we close out, is there any words of wisdom or words of advice that you would want to give some of our potential clients here in the near future?
Well, yes. The most common questions, we get right now is rates are high, rates are high, rates are high. Rates are higher than they were, but they're still lower than they've been historically, putting that there. And a lot of people say, well, I'm just going to wait and rent right now. Well, I've been in a long time, and I'll give you the analogy. Even if an interest rate's 6.5%, 7%, 7.5%, you know what? When you rent a home, you're paying 100% interest. 100% of the money you're paying is going to somebody else to build them equity in their home. The other thing, that is, I can tell you, and data's dictating it, and our market dictates it with there being multiple offers. Homes aren't getting any cheaper.
That's right.
No, they're not going up 8 or 9% this year. They're going up 1.6 to, I think 2.25. I think they're 1.7 year over year. So when you kind of think about that, if you're paying rent somewhere, you're not gaining anything.
That's right.
You can always refinance 2 years from now. And we do have a purchase protection program, which means if we do the financing on a home you purchase, rates do go down, and we monitor those for you. We've got a system here that says, hey, Joe that we did 6 months ago, his rate was 6.75. Well, we can get him a rate of 5.75. So then I'll reach out and say, hey, look, we can refinance and get you that lower rate, and we waive our underwriting and admin fee for that refinance. So it saves you some money there. A lot
That's
of times on a rate and term,
great incentive. I believe a
Yeah,
lot of
and a
people
lot
refinance with no underwriting fees.
right. And the other side of that, unfortunately, we can't get out of the state and the county want their money. And of course, in Florida, that's how they make, that's our tax basis because we don't have a state income tax. So there is a little bit of cost there, but sometimes the appraisal's waived. Your escrows are already set up, so all we're doing is moving your escrows from your old loan to your new loan. So it's a very cost-effective way to get into a better interest rate down the road, which we know eventually will happen.
Yeah, I'm excited about this product that you're introducing. And I want to stay in tune, and we've got each other's contact information. I believe we're going to caption that and post that when we actually deliver. Edit and deliver. So anyways, Ed, I appreciate you. And again, I was just tickled to choose the right loan officers to come on board because, again, you have had many years of experience under your belt, and I love that. I love your customer service, and you're totally knowledgeable, and some of the clients that actually I've referred you to. They really love your service, your customer service, your products, and your knowledge of all the loans that are out there. So thank you so much, Ed, and we will definitely keep in touch.
All right. Well, thank you for having me, and I'm always here to assist and answer questions.
Sounds good. Great. Now get back to your
Thank you.
game. Was it the
Yeah,
game
the All
tonight?
Star game's on. Yeah.
Okay, I'm
All
sorry
right.
I took some of that part of that time.
That's okay.
So,
All right.
okay,
Thank
all
you.
right. Good night. Have a good night.